we are going to renegotiate Bretton Woods 2.0. I am referring to a brand new monetary standard. That's what Bissett's going to do over the next 4 years. Some are calling this Bitcoin dollar system akin to the petrodollar system that was developed in the 1970s. The United States has to be the leader in crypto. And Ryan states that to do that, you need to be the leader and you need to tie stable coins to US dollars and US treasuries.
Central banks around the world cut their key interest rate this week. The Swiss National Bank cut by 50 basis points, the ECB cut by 35 basis points, and the Bank of Canada cut by 50 basis points. What does this mean for monetary policy in the U.S.? What will the Fed do next, and how will interest rates and stocks respond to these cuts going forward into the first quarter of 2025? Well, our next guest believes that we are transitioning into a new global monetary system, a Bretton Woods 2.0, as he likes to call it. We'll talk about this and the impacts on investors with Jim Thorne, Chief Market Strategist at Wellington-Altus Private Wealth. You'll notice that I'm using Ground News as a news resource. They're a fantastic aggregator with a lot of features, unique features that nobody else has. Take the Bank of Canada news story, for example. On the right side, you'll see a bias distribution meter. So it shows you what percentage of the stories or articles covering this story are left-leaning, right-leaning, or center-leaning. Now, on the bottom, you'll see an ownership meter. It shows you what percentage of the news articles covering the story are independent or from independent sources or owned by major conglomerates. I'm happy that Ground News has chosen to continuously sponsor my channel. They've saved me a lot of time from having to search for individual stories on Google because they aggregate everything that I need in one place. Their search bar is also fantastic. Check it out. Link down below. And if you use my link now, you can get their Vantage plan for half off at under $5 a month, or give it to a friend. Head to groundnews.com/David Lin in the link down below, or scan the QR code here to get started today. Jim, welcome back to the show.
Thanks for having me, David.
Jim from Wellington-Altus, we've talked before. Link down below. If you want to see the last interview that I did with Jim a couple months ago. Things have changed since a couple months ago, Jim. We climbed in terms of the S&P 500. The S&P has broken new highs, 6,000 points once more. Bitcoin has reached $100,000. Gold has fallen a little bit off its highs, but recovered some of his losses past post-Trump win. And of course, as I mentioned in the introduction, a lot of central bank cutting. What's next for the markets? Let's start there.
I think the markets have to grapple with the fact that President Trump is going to implement his economic policy that he talked about on the election trail quite quickly next year. And I think we need to take Mr. Trump at his word. So, that is the first thing. I think the next thing with the markets, what I find very interesting is the fact that when we were talking about 6 months back, we were really concerned about who was going to be the Treasury Secretary. And I think Mr. Trump's choice of Scott Bessent was an excellent choice. So I think we can take the credit crisis off the table because they're really focused on deficit reduction. We got Doge. And so what I'm looking at moving forward is, first, look, all these rate cuts that we've had this week do not take effect until August 2026. So the central bankers are late. The Fed has their dual mandate achieved.
Wait, sorry, what do you mean they don't take effect?
Said monetary policy has lags of 18 months. So the Bank of Canada that cut this week, you're really not going to feel it until the summer, July, August of 2026. Okay. So the effective lagged Bank of Canada rate or Fed funds rate that the economy is dealing with in 25 was set 18 months ago. So they're dealing with 5% rates. We're going to have fiscal policy shift from a tailwind to a headwind. And the real question, I think, moving forward is, how do investors deal with the growth slowdown that we are predicting in the back half of 25, 26? If Doge is successful, which I think it will be, does the market react positively to that or negatively to that? I've got a 7,000 target for the S&P 500 next year. And I think it's going to be the usual suspects in terms of secular growth. And I think Bitcoin's going to have another great year. But, we have to be honest with the fact that there has been this vibe shift in the market. It's a very good feeling. We're focused on pro-growth, private sector, deregulation. But how does that vibe hang on when we start to see the real economy, the top line real economy, really start to decelerate in the back half of 25.
Do you think the economy is decoupled from the stock markets right now?
Yes, which is normal, right? So typically, when the Fed starts cutting rates, risk assets instantaneously start to react from monetary policy, while the real economy is lagged by 18 months. So we're going to have this weird juxtaposed yin and yang next year, where the real economy slows, but the stock market or the risk assets appreciate in value. Totally normal.
What does the central bank need to do now to avoid even more slowdown, even more aggressive cutting? Or is it too late?
I think it's too late. I mean, arguably speaking, if we were back at school, the Fed should be at our star right now, which is 275, right? They should be they should be there. And up here in Canada, the Bank of Canada rate should be below 275. They're late. And so, what happens is, I think when you read the speeches and you get away from the noise, I think the folks that are understand this on the FOMC understand that, and we're going to continue to normalize rate. But David, what happens in, let's say, October next year when we get to 275 and folks realize that we're going to have to go to the 2% bound? David, look at the rates in China, which are in free fall. That is the canary in the coal mine for us. They have grasped defeat from the jaws of victory in terms of raising rates too much. And the risk is growth scare in deflation. And they're putting interest rates at the zero bound back on the bingo card.
Take a look at my screen now, Jim. I want to talk about the bond market. This is the U.S. 10-year Treasury yield. The Fed started cutting in September, and ever since then, the 10 years just been on a one-way street upwards. Why is that?
Yes. So what we're dealing with right now is people, or the market is still, I think, we're concerned that Trump wasn't concerned about the deficit. That's been taken off the table. Two, there's a concern, or I think a misplaced concern, that inflation is the problem. That's not it. And three, I think that the people in the credit market are not really looking at the underlying numbers of the economic data, which show that the private sector is in close to a recession or even in a recession. So I would suggest that trade is going to be unwound dramatically in the back half of 25 when people realize that, oh my gosh, the economic growth that we've been seeing is being caused by fiscal deficits of 6% and debt to GDP of 125%. It's over, right? It's over. So I would suggest to you that I would be thinking the sweet spot in the yield curve right now is in the short end. But as we move through 25, you're going to want to get into the long end of the curve. I do not buy that the growth that we are seeing right now in the economy is generated by the private sector. Those that think that it is are completely and totally wrong and are on the wrong side of history.
Well, you talked about this lag effect from the central banks. Does that lag effect apply to inflation as well? People are concerned about whether or not inflation is going to come back on the back of all these Fed cuts, or rate cuts rather. When can we expect to see inflation return?
I don't think you see it. I mean, when you disaggregate or deconstruct inflation, when you take out owner's equivalent rent in the United States, inflation is 1.6%, right? Rate hikes are inflationary. The reason why owner's equivalent rent is high in the United States is because mortgage rates are so high. This is macro. This is third-year macro. Rate hikes are inflationary. If the Fed wants to get rates down, they need to cut inflation, they need to cut rates. And so I do not buy into this thing that the inflation is the problem. And so, and all I do is I look at yesterday's CPI number. It was all shelter. Take it out, there's no inflation.
Are the markets going to like the fact that we could possibly expect less fiscal stimulus next year? Scott Bessent's wants the new secretary of the Treasury. He wants the deficit as a percentage of GDP down to 3%. They're setting up a commission with the Department of Government Efficiency, DOGE, with the objective of cutting government spending. I don't know what that's going to do with the markets. Can you evaluate?
Well, we know that it creates a growth scare. That's one. And I think the known unknown is the fact that how does the market respond to that? How does the market respond to a short-term decline in economic growth because they're focused on deficit reduction, right? And so I am suggesting right now that it's going to be viewed positively. But David, never say never. We have to keep an open mind. And if they don't, then, we could have a significant drawdown in 2026.
Drawdown on what, equities?
And equities, yes. Yes. For a short period of time, yes.
I've seen the view that the $100 Bitcoin move is a precursor to more gains in the equities markets. It's just a return of animalistic spirits, which will translate to all risk assets. Do you agree with that notion?
I do, but I think people are missing the larger picture going back to Bissett in the sense that we are going to renegotiate Bretton Woods 2.0. Paul Ryan wrote a very interesting op-ed in the middle of the summer. And I'm just going to bore you for a sec here, David. Yeah. What people miss is that when we take $1,000 and convert it into a digital wallet, then we buy Bitcoin, there's an intermediate step, which is we convert it, or called digital transformation, where we convert it into a stable coin. Okay. They're going to legislate stable coins to be backed by U.S. Treasury. Okay. When you do that, what we have just done, just because of that simple little step, the bill is on President Trump's desk. What is going to happen is if Bitcoin goes to 20 trillion or the same size as gold, you have just created a massive demand for U.S. treasuries. And you know what that means? That whole narrative of fiscal dominance, that interest rates have to go higher to finance the debt, go down. It gets flushed down the toilet. Paul Ryan talks about it. In fact, when you look at the recent presentation of the Treasury to the TBOC, which is the Treasury Board Advisory Council, they have a massive section in there about the demand for treasuries because of the growth of crypto. That is going to be the game changer as far as I'm concerned. So if the number of stable coins increases in the world, that creates demand for U.S. treasuries. We cracked the code. And Ryan has written an article about saying this is a solution to our deficit problem. So the interesting thing I would say to you, David, is when you have two individuals that do not like each other, in President Trump and Speaker Ryan, and they agree on something, best investors pay attention to that.
When you say renegotiate Bretton Woods 2.0, are you referring to the gold standard?
I am referring to a brand new monetary standard. That's what Bissett's going to do over the next 4 years. He's talked about it. This guy is as sharp as a tack. He teaches economic history at Yale. He worked for Soros, and he was in London when they attacked the gold fix. This guy understands where we are in economic history, and the Bretton Woods system, the fiat money system that was developed out of Bretton Woods, has to be replaced. Some are calling this Bitcoin dollar system akin to the petrodollar system that was developed in the 1970s. Isn't it interesting that Ludnick, who's now the Commerce Secretary, took 5% down in Tether? It's very, very interesting that things are starting to move that way. It's and listen to what Trump is saying when he rang the bell of the New York Stock Exchange. The United States has to be the leader in crypto. And Ryan states that to do that, you need to be the leader, and you need to tie stable coins to U.S. dollars and U.S. treasuries. We got the petrodollar system coming our way, David.
What is this new monetary system going to look like? Is it going to be backed by stable coins?
Stable coins are the intermediate step of taking value in the analog world and transferring it into the digital world. And it's an intermediate step that allows you to sit there and convert value and put it somewhere where it's very stable until you go in, you buy yourself Ether or Bitcoin or Solana or any of your NFTs. So as long as the value stays in that digital area, you're going to have a correspondent digital coin. So what people miss is this digital transformation from the old world to the new world. And when you do that, and if Saylor is right, and all of this is going to come through and come over, by definition, if they legislate, which they are, that these stable coins have to be backed by U.S. Treasury, we've just created a brand new balance sheet, Dave. We've just created massive demand for treasuries.
Is that the hidden use case, or maybe not so hidden, of the Bitcoin strategic reserve that Trump wants to implement, maybe a Bitcoin backing system down the line?
That's what they're talking about. And then you hear Powell talk about the fact that, he corrects people like Jeremy Siegel that basically says that Bitcoin is a substitute to the U.S. dollar. No, it's a complement, and it's going to allow for the reworking of the global monetary system. Look you got Russia now accepting Bitcoin. You've got Xi talking about Bitcoin. Hey, if it's backed, if the thing that basically is the bridge between the digital world and the analog world is stable coins, and stable coins are backed by the US dollar and the US Treasury. The U.S. monetary leadership is insured for the next century. It's profound.
What is the objective of this transition into a new monetary system for the U.S., at least from an American perspective? Why are they doing this?
Because if they don't do it, somebody else will. And I think that's the biggest mistake that the Democrats made in terms of putting the thumb and not allowing innovation to happen. If we want to just simplify this down, that if we want the U.S. dollar hegemony to continue, if we want to go back to World War II and have the U.S. dollar of the medium of exchange for the global economy, it needs to have an important place and role in this digital world. And I think we are starting to see the early building blocks as we speak, and it's going to happen under the Trump presidency.
The Trump presidency also wants more manufacturing to be done back home. And that's an antithesis to the strong U.S. dollar. You can't export if you have a strong U.S. dollar, right?
You can't. And I just think that the way I look at it is it's a negotiation tactic. It's not going to be as crazy as people think it is. We can go back to, Alexander Hamilton and Clay and McKinley and 60% tariffs. But I think it's going to be a threat in terms of people getting in line so that we have a level playing field in terms of manufacturing and trade. I think that's what Trump is going to push for.
This transition to Bretton Woods 2.0, tell us about how the markets will be impacted by this transition. You already said that there will be more demand for treasuries. What else?
I just think it's going to be, well, for me, it's going to be the fact that I think Bitcoin is going to be, and let's put Ether and even Solana, let's put a couple of them in there. They're going to be seen as solutions and not problems. So that's the first thing, and we're going to build this system out. And look, the banks are going to have to embrace this. And there's going to be mergers and acquisitions in the United States that are going to basically catapult them. The new nomination for the FTC is going to allow mergers and acquisition. So it's going to be a very, very, it's funny, but when Reagan rang the bell in 1985 in the New York Stock Exchange, he said, "Unleash the bulls." That was his favorite statement. I think Trump is going to unleash the bulls. Think about the mergers and acquisitions that are going to take place. I don't know anything, David, but I'll tell you this. If mergers and acquisitions can happen, I would not be surprised to see Oracle try to take a run at Palantir. And they're going to be able to do that because Elizabeth Warren isn't going to be there to poo-poo mergers and acquisitions. You're going to see regional banks rolled up. Why? Because you can close branches and fire people. We're in a period of time that is going to be very, very, very unique with a lot of changing parts. And I just think that the United States is going to be the place to be because they are the tip of the spear about embracing tax cuts, and trying to create an environment that is capital friendly and deregulation, and understanding finally that the digitization evolutionary process is going to come. It is going to happen. And the Americans, at least Mr. Trump or President Trump, is saying, we're going to take a leading role as opposed to being in denial.
So let's tie this back to the markets. You have a 7,000 S&P 500 target. What are the main risks to getting there?
Well, the main risks are going to be, as far as I'm concerned, is in the back half. First off, Trump is not able to implement his strategy fast enough. Okay. 2, Powell and the Fed stop cutting and normalizing rates. And 3, it's the fact that the market has a visceral response to improvement of economic efficiency in the government. We get a cut and we have a slowdown in economic growth, but people understand that slowdown is coming from the government side of the balance sheet, not the private sector.
Bitcoin, then 100,000. I'm guessing you don't think that's the end of the cycle. We're going to have more room to climb, or is this it?
I don't like doing price targets, but it's going to go much higher. I don't know if you use Mr. Powell's statement that it's gold and that's somewhere between 17 to 20 trillion. That's $1 million. I mean, what I do say when I get pressed, I think over the next 4 years, it's going to be over north of $500,000. You don't know because of the scarcity problem, right? You don't know. But what's different about this halving cycle, David, as opposed to last halving cycles, is the fact that we've got all these demand shocks. Today, Texas says they're going to table a bill. It's going to be a reserve currency. Trump is going to implement the Treasury Reserve. Eric Trump is out there talking about the fact that $1 million is doable. So I'm more of the fact of what I'm trying to say is people need to take Mr. Trump at face value and to recognize the fact that we're going to renegotiate and build a new Bretton Woods system. And I would suggest to you that Bitcoin and digital assets are going to be a major player in whatever this looks like going forward.
Are other currency pairs a collateral damage in this transition to a Bretton Woods 2.0? In other words, would you short peso, Canadian dollar, et cetera, et cetera?
No, I can't, because I think everything's going to be tied to the U.S. dollar, and so up here the dollar U.S. the CAD's at 70 cents, which is more of a reflection on economic lack of forward-looking economic industrial policy up here.
Yeah, let's talk about that for a minute. Why is the CAD depreciating? Why is it weakening?
Why is it weakening? Because, I'm just going to anchor off of what the CFR has to say, right? We Canadians, we need to get down there, or Canada needs to get down, and it's irrespective of who's in the White House. We can complain all we want, but whether it's President Biden or President Trump, the Americans have a cohesive industrial policy of where they want to go. Think of the CHIPS policy. Up here north of the border, we have nothing. And I wish the Canadians would get down to Washington and do what Paul Martin Sr. did in the 1960s when he went down to Texas and negotiated the auto pact with then Vice President Lyndon Johnson. We are living in the past up here, and we need to get on our front foot and figure out what Canada is going to and how we're going to participate and how we can grow with the Americans as they go through this generational structural adjustment.
Let's talk about trade policy with Canada and the U.S. now, because we're talking about the Canadian economy. President Trump, of course, as you know, has threatened more tariffs on Canada. This is a remark from Premier Doug Ford of Ontario recently. He threatened to cut off the U.S.'s power supply.
Chrystia Freeland's going to put a list together. We're going to put our list together, and I'm sure the other provinces will as well. But we will go to the full extent, depending how far this goes. We will go to the extent of cutting off their energy, going down to Michigan, going down to New York State, and over to Wisconsin. I don't want this to happen, but my number one job is to protect Ontarians and Canadians as a whole, since we're the largest province.
I don't know if this is an empty threat, because I know the U.S. is shale, but Canada does export a lot of natural gas and oil and energy products to the U.S. So,
David, the only clause that has never been touched since the first trade agreement between Brian Mulroney and Ronald Reagan was written in the 1980s was the proportionality clause, which guarantees American access to Canadian energy. It's unfortunate that the Premier of Ontario does not know about what is existing in the free trade agreement. We are bound to give them exposure to our natural resources.
But he could break this agreement if he wanted to.
Oh, if you want to tear it up, sure, go ahead. You really want to threaten the United States, right? I think it's a massive mistake on Doug Ford's. I think we should be trying to figure out what is going on, trying to figure out how we can coexist. But then again, Doug Ford is a magnificent politician. And he understands that he's up for re-election very soon. And he understands that he lives in a province which is more liberal than conservative. And he's got a lot of constituencies in his province that still does not like Donald Trump. And maybe he's trying to show some strength. Okay. But in terms of the free trade agreement, it's in the proportionality clause. Then they've never talked about. Well, the Americans have a continental energy plan. That's what I'm trying to get at.
What is the appropriate government response then to a 25% tariff in Canada?
The appropriate response is to sit down at the table and say, what can we negotiate? What are the deals? What did Trump say on the New York Stock Exchange. He needs energy for AI. They do. How can Canada be a part of this? We've got to stop throwing temper tantrums and try to figure out what we're going to do in a new digital age where we do not have an innovative sector up here in Canada. How are we going to coexist? So, hey, do we want to increase, the Churchill Falls and get more hydroelectric power? What about uranium? How can we help as opposed to acting like high school students and throwing temper tantrums in the cafeteria? This is real. This is important. And it's unfortunate that our politicians and leaders aren't acting with a little bit more maturity.
Yeah. Okay. So CAD USD then, more appreciation for you or we're not?
We're here. We're done. Everybody knows that David, I talked to a lot of people in Europe and the United States. The question that I always get back coming up here is, why don't Canadians understand the predicament they're in, right? Our per capita GDP is about to fall below the halfway point of the OECD, right? Canadians got to understand that our productivity is negative, right? We've got big structural problems in this country that we need to address, and we need to stop virtue signaling that we are one of the top economies in the world. We're in big trouble up here, David.
Well, does Trump's re-election mean good news for the Canadian mining and energy and gas sector, at least?
Everything's on hold until we see if Mr. Poilievre gets in.
Okay.
Well, but I would say yes after he gets elected, which I would say in the back half of this year. Back half of next year.
Right. Okay. So that does seem to be the consensus view. Then closing off on markets once more, your best asset classes for 2025.
I would buy secular growth. I would buy the NASDAQ 100 or the S&P 500.
Yeah.
And I think Bitcoin again is going to outperform.
Excellent. Jim, thank you very much. That was Jim Thorne, Chief Market Strategist at Wellington-Altus Private Wealth. Where can we find more about you and learn more from you, Jim?
You can follow me on X at Dr. J Strategy, or you can go to wellingtonaltus.com and get my market insights.
Excellent. We'll put the links down below. Jim, Happy New Year. Merry Christmas. Thanks for being on the show this year, and we'll speak again next year.
You too. Merry Christmas.
And thank you for watching. Don't forget to like and subscribe.